Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It is 10 minutes to 3 PM on Sunday the 28th of March 2021 and we're going to be looking at the US stock market for the next few minutes. Today we will only be looking at the SPY, which is our proxy for the S&P 500, and the NQ1 mini futures, which is our proxy for the Nasdaq. We won't be looking at the Dow today, as I don't have anything I can offer you really since the last update. I'm still very much in a state of indecision regarding the Dow in terms of getting a count that fits that I like it. I've got the ABC I introduced to you last week, which I'm still holding as an option, and I'm still trying to work on an alternative that I'm just struggling to get fit. It's basically an ending diagonal, but yeah, it's just not particularly clear. So until I have something more definite to give you, or we see something occur in the market which makes it more obvious, we're going to stick at looking the S&P and the Nasdaq for the moment. So without further ado, like we always do on this channel, we're going to start with our basic technical analysis first, and that Elliott wave analysis second. But first, if you're new to the channel, let's give you a quick rundown of the chart. We have our Elliott wave count, which is all the numbers and letters, so we're just going to get that out of the way. We then have 4 exponential moving averages on the chart, 10 in yellow, 20 in blue, 60 in orange, 250 in green. We have a volume profile on the right hand side showing all the various peaks and troughs of buy-sell volume, with the highest level being the point of control, which is the yellow dashed line here. We have an RSI set to a 10 close with the green 30 level representing oversold and the red 70 level representing overbought. We have a MACD with a 10 for the short term moving average and a 20 for the long with a 9 to smooth. Alright, so here we are on log scale. Let's just switch off that for the moment. Onto arithmetic scale on the weekly time frame on the SPY, and hella turnaround on Friday. Really bounced strong on the Friday trading, and have put in this pretty bullish looking bar. We're just coming over and have a look. Wick to the downside through the 10 exponential moving average acting as support, and a bounce not quite closing at all-time highs, but very close to pushing to a new all-time high, which I think, you know, we closed at an all-time high. So I should say we've been higher on a weekly time frame, but we haven't closed there. And on Friday we did close at a new all-time high. So I guess that's, you can look at that how you like. I think it's fundamentally bullish for the short term. We are still above the 10 exponential moving average, above the 20, above the 60, way off the 250. Well above our point of control on the visible range we see here. It doesn't matter where you look really, you're going to be a long way from it. It's just going to get further away the further back you look. RSI, not into overbought conditions yet. Above the neutral zone of 40 to 60. Just been flat for the longest time now in the RSI. As the prices continue to push higher, the RSI has been flatlining. There's been divergence between the latest highs. We can see high, lower high, lower high, high, higher high, and higher high in price, while lower highs in RSI. MACD is flatlining as well, pretty much. Bearish crossover, but no real momentum to the downside to show up at all. Just a few small red bars on the histogram, and nothing definitive showing any breakdown to the downside in the short term. So likely just going to keep grinding higher on low momentum. Really, this market's looking more and more tired, and it would appear that, even though, just going to touch on the fundamental for a moment, don't do it very often, but the attitude has been that everyone's going to take their stimulus check and put it in the stock market. I think when we were going into national and international lockdowns the first time round last year, that was a sound idea because there was nowhere else to put it. But that was when we were going into an indefinite period of lockdown that could last weeks or months. Now we're coming out of it and the light's at the end of the tunnel. So are people really going to do that, or are they going to go and spend it? Okay, are they going to go and take that holiday that they've been waiting for? Buy those goods that they've wanted? Are they really going to pour it in the financial markets? People have been receiving them now for a week or so, and we don't see any sign of a big pouring of, you know, stimulus checks into the market at the moment. Momentum's still dead, so maybe that speculative period is dying out. Anyway, enough of the fundamental. Let's get back to the technicals. So let's have a quick look on the day time frame and see what we can see here. In the neutral territory between 40 and 60 in the RSI here, we had some red bars on the histogram here, but we're already looking like we're going to cross back over bullish to the upside here. The short term moving average ready to cross over the long term moving average. Two big green candles for the Thursday and Friday, closing the week above the 10 and the 20 exponential moving average here after dipping below them, still above the 60, still above the 250. It looks set to push higher, and we'll talk about how far in a moment when we come back to look at our Elliott wave count. So that's the basic analysis for the moment. I think we're going high next week, or at least in the short term for the next couple of weeks. On the Nasdaq, let's just clear the count again, see what we can see. Weekly time frame, absolutely wedged in what looks a bit like a triangle from a weekly time frame here. It looks different when we come down to a smaller time frame. Trapped between the 10 and the 20 exponential moving average, although there does seem to be momentum building ready to pop to the upside here. That 20 exponential moving average, even though it's been wicked through 3 times in the last 4 weeks, has held for the moment as support and provided pretty strong support in the meantime, way off the 60, way off the 250, and moved back into neutral territory on the RSI here. A series of lower highs in the RSI going all the way back to 2020. We can see high, lower high, lower high. We might come back up to set another lower high on the RSI, and a series of high highs in price. Momentum dying off in the Nasdaq as well. Now, I currently have a bearish count set up for this, but it could be bullish. We'll discuss the two options as we come down to look at the Elliott wave count in a moment. Now, on the daily time frame, yeah, just tangling up the moving averages at the moment. We've had the 10 and the 20 come down and cross the 60, but we haven't had the definitive breakdown with the price below both. Just moving sideways. It could just be a correction before we move back up. It could be a part of a free wave correction up before moving down. But we're all entangled with the moving average at the moment and just kind of moving sideways, so waiting for a breakout either way. Touch of oversold conditions on the day time frame and then move back into the neutral territory, moving sideways between the 40 and 60. Same deal with the MACD here, build up a bullish momentum and then starting to flatline and flatten out, likely before another release of tension after all this coiling up, potentially to the upside, I think. And then that's that. So let's come down to the S&P count for the moment and see what we can get. So on here, we're just going to switch into log for a moment. The first thing I want to touch on when we're looking at the Elliott wave count is I just want to give you a long-term picture so far. So all the way back here, we have the bottom in 2009. This is the last bear market. Down, I believe this is part of a greater free wave structure on grand supercycle level, but we could talk about that in another episode. Either way, this was the collapse of the housing market bubble. This is the GFC, and then we've had our bull market begin from the low, and we've gone 1, 2, 3, 4 in this expanding triangle, and now up into a fifth and final wave. That's what I suspect. So we had an overthrow in the primary of the cycle 3, and we've had an underthrow in the cycle 4 before pushing all the way back up to the top of this trend line. So if we take cycle wave 1 and cycle wave 3 and we project forward and drag down to the 2 and project forward to where we'll find the 5 and then zoom into this recent price action, you can see we're very, very close to that long-term trend line. We're right in the neighborhood of it. So I'm still of the opinion that yes, I think we're going higher, but I think we're nearing the top. You know, I know I've said it before, but it's just the way I look at it. I see a long-term bull market that's dying slowly, wants to roll over. There is still a lot of belief out there, admittedly, that we can just go up forever and never have a bear market ever again. But these things are normally 5 to 8 years long. We've been at this for 12 years now with this one. We're nearing the top, my opinion. You can disagree if you like. Quick sip of coffee. Right, let's zoom in to the 2-hour time frame, shall we? Auto the chart. We're just going to go full screen for a moment. So I've got intermediate wave into primary wave into cycle wave set up like this. So wave 1, wave 2, wave 3, wave 4, no overlap of the 1, and now moving up in a fifth and final wave to complete probably near this trend line. I've actually got us completing above the long-term trend line using the major trend line here, using the same rule, attaching the 1 and the 3 to find the 5 has us finishing up here. We don't have to come up all the way up here, but it would be the perfect place to finish. If we just come down to a smaller time frame and zoom in for a moment, we can see how we put in this really nice 1, 2, 3, 4, 5 wave structure on the Friday. Nice to feel you've got like a little flat pattern here in the 4. So this, I've got this as a 1, 2, 3, 4. This is the wave structure I'm looking at the moment. Like so, rather deep 4, and then pushing up into a 5. Now, this does also support an alternate count that I've seen, not my own idea, but I've been reviewing it. And it's the idea that has inspired me to have a look at the Dow Jones as an ending diagonal, which is the idea that this is an ending diagonal too. Okay, so we're actually in an ending diagonal. We would be expecting a series of 3 wave structures. Okay, and if we're looking at and an ending diagonal of the 5th primary wave, as well as an ending diagonal within the 5th intermediate wave, then the whole thing would take a 3 wave structure in the 5th wave. So we would be looking at, you know, an A, B, C rather than a 1, 2, 3, 4, 5. And given the degree of swing up and swing down, the swing high, swing low here in this pullback, it does look viable. And therefore you could count this as a 1, 2, 3, 4, 5 A, B, C, B, 1, 2, 3, 4, 5 C into the top. Just an idea. But for the meantime, after such a strong breakup on the Friday, perhaps a pullback in the short term to put in a wave 2, where we go into, you know, wave 1, the wave 2, wave 3, wave 4, wave 5. This is the idea that this is actually an impulse wave, not an ending diagonal. Otherwise, these would just represent the 5 waves of the C. You know, it would operate just like an impulse wave. It just wouldn't be. It'd be part of a 3-wave structure, 5 waves in a C rather than 5 waves in a 5. Okay, so that's basically what I see for the S&P at the moment. We see this expanding pattern. That has just been this upper trend line has been respected multiple times on the way up, and it coincides with a major long-term trend line going all the way back to the start of the bull market, and we're getting very, very close to that level at the moment. If we have a quick look at what other forms of confluence there are up here, then we can take the wave 1 and project it from before, and then we can come off log for a moment and have a look at the arithmetic time frame, and we can see that 1 to 1 would bring us roughly up to the top. Here's the 413.68 I've got here. If we got projection of the 1 from the 4, we would come up to about here, which would take us slightly beyond this trend line, but it doesn't have to, because obviously, you know, if we were to come up to 1-to-1 parity, 1-to-5 parity, then all we really need to do is just change the time frame. You know, that line's just going to keep coming out to here, isn't it? And then you could say, well, 4 over here, 3 over here, and then 5 brings you up to that, brings you up to the 100, like so. And it's just a matter of time at that point. But depending on how long it takes, we would then top out in minute 5, minor 5, intermediate 5, primary 5, cycle 5, all done up here. So you can see how even a wave 1 projected from before would bring us to roughly 413, which would still be in keeping with this upper trend line and the long-term trend line on the log scale as well. But we're looking at it in arithmetic here. On the log scale, the 1 would finish higher, but same gig. You know, if you extend it out further enough, depending on how long it takes, they eventually interact. Whether it's the shorter term trend line, or we have some form of greater sideways movement, or whether it's a short term trend line, they eventually interact with one another. So an overthrow of the long term trend line and a hit of the short term trend line all depends on the time it takes to get up in these 5 waves. Could happen in a few days, could happen in a few weeks. But I still feel that there's upward movement to come to finish off this 5th and final move. Okay, then the next target we want to look at, having done the 1 to 4, is we want to look at the overall extension of 3 and 1 from 4, and this will give us a 61.8%, around 420, a little higher, but this would be another way of predicting the overall movement for the wave 5, up to 61.8% the wave 1 and 3. But we're all hitting in this kind of area. We're all roughly hitting in this kind of area, whether we're using the wave 1 and 3 together or whether we're using the wave 1 projected from the 4. If we just switch off of log, that target comes down again a little bit, puts us back at 416. Now obviously that's familiar because we just projected the 1 from the 4, which also gave us, what was it, 414. So there's a couple of dollars in it there. Oh, sorry, this is the SPY, so there's actually 20 bucks in it there. And because obviously you've got to move the decimal point one place to the side because we're looking at the SPY, not the SPX. But either way, they're all in this ballpark. The 100% extension, the 61.8% extension, they're all roughly finishing near or on this trend line depending on the time frame. So that's just what I'm looking at the moment. I'm expecting a move up in 5 waves to complete either a C of an ending diagonal or to complete the 5th of the 5th of the 5th of the 5th of the 5th. Up here. That's the SPY. Right, so let's move over and have a look at the Nasdaq. Bring up the count. So, couple of things to look at here. Let's just go full screen. We broke trend in the Nasdaq, and we haven't yet in the S&P or in the Dow. So, this is the idea that the indices are diverging. Okay, that the Nasdaq broke trend first. Here is the trend from the 2 to the 4, and then finding the 5th on the median line precisely, literally to the tick, and then breaking down. So 3 coming up to the top of the trend line, 4 to the bottom, 5 to the median line, break through the trend line, retest it, starting to fall away again, potentially for another retest, I think. So if the bearish count is correct, this would mean that the Nasdaq has already topped, unlike the S&P and the Dow, and is already on the way down and is leading the way down. Now this would be quite familiar to those who are a little older and were at least adults during the tech bubble like myself would appreciate that this looks quite familiar to the tech bubble, with the Nasdaq running away with itself and being the first to top out and being the first to lead the way down. Whereas the Dow took much, did take insignificant losses during the tech bubble crash. It sold off along with everything else, but absolutely nothing like the Nasdaq sold off. Okay, so more volatile movements and sooner is what we'd expect to see in the Nasdaq if the bearish count is correct. Excuse me for one moment. So let's zoom in and have a look at more recent price action on the hourly chart here. Okay, so I spoke in the previous video about going long in the Nasdaq, still am. And I've just topped up my position because, yes, you say, well, I thought you were bearish, Tom. I still am a bit bearish, but I believe this is a three-wave structure. Okay. So the first buy opportunity was when we got down, saw this wave 1 up and wave 2 back. And the next opportunity was this potential wave 1, wave 2 pullback in 3 waves, or A, B, as I've got it, before going up again. So if we just take a few measurements here for a moment, we know that we've come down and back up to the 61.8 and 65 straight into the yellow zone, right? So we can count this as an A, 3 waves back in the B, 5 waves up in the C to complete a 2 before heading much lower in a massive sell-off. Or if the bulls are right, then this is just a 1, this is a 2, and we've got 3, 4, 5 to come much higher. Okay, and the Nasdaq's going to creep back inside of this channel and potentially push for the median line, if not higher again, if the bulls are right, in which case you might as well be long until you complete at least what we could either be the 3rd wave or the completion of the C. So I'm still expecting 5 waves up from here regardless, because I believe, as I've said before, that we're heading into a double top. If my bearish count is correct, then I said, the dip's going to get brought, faith's going to return, and we're going to push for a double top or very close to it. Now, if we take the move so far, which is our projected A, and project it from our B, assuming it's over, the 100% brings us to 13,700.75, which is just a few percent from the high. It is 1.53% from the high. So a very deep wave 2 retracement, very deep. If we just drag all the way down, we can see it'd be roughly a 90% retracement to work our way back up to here. And then we could roll over, and that could still, depending on the time it takes to put in this 5, let's say you move the 5 over to here, move the 3 over to here, you know, you move the 4 over to here, whatever, however long it takes, you could easily still be simply testing that outside trend line, and then off you go. So that would be what I'd expect to see bearish count. So for as long as the bearish count holds, we've done, I think, an A, a B. If you're already long in the Nasdaq, then the cutoff point has to be back at, or the invalidation point. You decide where you want to put your stop, that's your business. But the invalidation point for the stop is 12,202 spot 25, which is this low here. If we come down below that, then the bulls have got to surrender the long position because we're going to come down lower. If we continue to push higher, which I suspect is right, then we're probably just on a wave 1 and wave 2 to come, 3, 4, 5, into the C of the 2 to back test this channel and then start the wave 3 down. And that would be big sell-off coming. And it would also, in this wave structure, I mean, all of this down here is just nonsense, obviously, because I haven't placed how deep this would go. I have no idea. We'd have to measure it once the wave 2 was confirmed, and we'd be looking for a 1.618 extension of the wave 1. We should be all the way up here. So, if the bulls are right, simple as, we'll take out the previous high. It's just, yeah, this won't be a deep 2, it would just be probably a wave 1, 2, and a wave 1, 2 of the 3 before we push even higher. So, cut-off point here for the bears is the invalidation point of the wave 2, which would be 13,903. If we come back above that, the bears have got it wrong and we're going higher. And you know, if you are long, I'm long for the moment. I'm not going to close down my long position until I get confirmation that this bearish count is correct. I am still leaning into it, but the point I'm making here is, you know, just because you have an overall overriding view of something doesn't mean that your time frames has to restrict. Doesn't mean you have to be restricted to buying or selling. Your time frame should determine that. And in the short term time frame, I think we're going higher. And if I'm wrong, the invalidation point for that long position is back here at 12,202. And you know, if I'm right, I want to see it stop before 13,903. Probably back testing this channel, taking a week or two to do it maybe, and then we roll over. Any move violently up in the short term which invalidates that and takes out this high, then the bulls are right and we're going higher. But there's room in both of these counts to run up further for a while. We could run up further in the S&P and still be retracing in the Nasdaq before putting in a wave 2. So the idea that they've topped separately or will top separately is still possible. Now, it is also possible that, like I discussed, we don't have to come up here, although we do know that the 61.8 of 1 and 3 on the intermediate time frame is up here, and the wave 1 projection from the wave 4 is up here too, and it all fits snugly along this, near this trend line and near the long term trend line on the log scale. So I suspect we're going to push higher in the week to come. Could be wrong. We only legitimately, in order to complete a impulse wave structure, if that's what we're looking at, we only have to just get above the 3 and then we could sell off. But it does look, after that outbreak on Friday, like there is another gasp to go. One more hurrah, one more party to attend and head to the highs before we finally give this thing up. I know that there are people out there who obviously disagree, and that's absolutely fine, but why is it I'm not counting this as a wave 1, 2? I've been asked, as in the whole move from the March low. Well, first of all, we'd have to see an actual breakdown, and we haven't had anything like the sort yet. And that's just my personal, because take for example the only breakdown we've had, which was from the high here on the 2nd of September. We didn't even make the 23.6% retracement, and I'm just not going to call that a wave 2. Not after this being the completion of our wave 4. So if this is our 5th and final wave, which I suspect it is, I suspect this is the wave 3, 4, and we're coming up to complete a 5. If all of this is a wave 1, then the time scale on the long-term count is just completely squiff, in my opinion. It just doesn't make any sense. I'm not saying it's impossible, but even if it is just a wave 1 coming into the top here, which I have heard suggested, you still need to see a wave 2, okay? So even if we do come all the way up here in a wave 1, a wave 2 would still bring us back potentially as far as 278 on the SPY, which would be all the way back to like May levels last year. So you could still see even if this is a wave 1, you could still see a significant sell-off, okay, towards the end of the year. I personally am leaning more bearishly than that long term. I think we're finishing a cycle wave 5 of the entire 12-year bull market up here, and I think once we complete that, we're going to go 1, 2, 3, 4, 5, A, just as the first move down, then a B, and then a C. Much lower pricing to come. That's my general hunch. Okay then guys, that's all I've got for you, the S&P and the Nasdaq at the moment. I think we're going to push higher for the next week. I think we're not quite done, and we'll just need to keep an eye on it in the meantime and see what happens. Alright then guys, if you're new to the channel and you've liked what you've seen, please subscribe, smash the like, leave us a comment in the comment section below if you want to. Feel free to share any of these videos, and remember to hit the little bell notification icon to remain informed of future video releases, as I'd hate for you to miss out. So that's probably going to wrap it up for the weekend, guys. I've got several videos out to you already. I'm going to drop in and do another couple of videos during the week, as and when I think it's necessary. And take care and have a great week. All the best. Bye bye.